Hello students, greetings Saturday. Let us go to CMA Inter July 2023 question paper so that we get some sort of idea. Okay, right. So as you all know, section 1 is compulsory, which consists of bits. So we need to simply put on the options or mention whether it's right or wrong, or mention the words, okay, that are suitable in the blanks. So altogether we have MCQs, true or false, as well as blanks. So B Limited pays 10 rupees per unit royalty to the designer of a product which it manufactures and sells. The royalty charge would be classified in the company's account as direct expense. Will be direct expense, okay. Next, the sum of direct labor and factory overhead is called as conversion cost. Overtime is nothing but actual hours being more than normal hours, okay. Director's remuneration and expenses form part of administration overhead. Which of the following cost accounting standard deals with the principle and methods of determining depreciation and amortization cost? Cost accounting standard 16, okay. Next, for the purpose of cost sheet preparation, costs are classified on the basis of functions. Next, which of the following items should be added to costing profit to arrive financial profit? Okay, that means in reconciliation in cost accounting system, we need to reconcile cost accounting profits with financial account profit, right? So what are the following out of the given items? Which items are to be added to cost profit so that it will match with financial profit? Okay. So the answer will be B here. Okay. Income tax paid is to be subtracted from cost accounting because income tax paid is an expense and it will reduce financial profit, right? If costing profits are more than financial profit, we have to reduce financial profit. That means we have to deduct it. Interest paid on bonds also, it will reduce financial profit. That means we have to reduce costing profit also. So over absorption of overheads. That means in financial, compared to financial books, in cost books, overheads are over absorbed. That means costing profit will be low. So we have to increase it. So B will be the answer. Which of the following statement is true? This is batch. Okay. Which of the following statements is true? Okay. Batch costing is a variant of job costing. No. Batch costing is different. Job costing is different. Okay. Next, job cost sheet may be used for estimating profit for jobs. That is true. Okay, job costing cannot be used in conjunction with marginal cost. That is completely wrong. You can use a method and technique together. In cost plus contracts, the contractor runs a risk of incurring losses. That is also false. Okay, so out of the given options, which one is true means B. Next, which of the following is an example of byproduct? Obviously, answer will be C. Standard price of the material per kg is 20. That is SP. Standard usage per unit of production is 5 kgs. That means standard information is given for 1 unit of output. For 1 unit of output, we require 5 kgs of raw material. Actual usage of production of 100 units is 520 kgs. So this is AQ and this one will be actual output. Okay, right. And this is purchased the rate of 22 rupees. That is actual price. They are asking us to calculate usage variance. Formula for usage variance is SQ minus AQ into SP. How to calculate SQ? What do you mean by SQ? Standard quantity of raw material required for actual output. So that is 100 into 5 minus how much? 520 into 22. So it should be 400 adverse. Okay. Which of the following factors are responsible for the change in break-even point? Break-even point formula is fixed cost by contribution per unit or fixed cost by PV ratio. Break-even point will change whenever there is change in cost structure or price structure. So answer is all of the above. Which of the following is not a potent benefit of using a budget? Answer will be D. Okay, with the use of budget, we can't measure accurately the external financial statement. Okay, we can't present accurate external financial statements. Okay, because budgeting itself is planning, right? So it is far away from accuracy. Next, true or false? Cost unit is anything for which a separate measurement of cost is required. That is false. Okay, because the statement will be true if we have mentioned cost object, not cost unit. Store surcharge is maintained inside the stores by the storekeeper. That is also false. Store surcharge is maintained by accounts department. Continuous stock keeping is a essential feature of perpetual inventory system. That is true. Traveling expenses to a project site is a direct expense. That is also true. Cost of idle time arising due to non-availability of raw material is charged to factory overheads. That is false, Nana, because non-availability of raw material means it is abnormal in nature. It should be charged to costing P&L account. Budgetary control facilitates introduction of management by exception. That is true. Cost prior to split off point is known as incremental cost. That is false. It is called as joint cost, not incremental cost. Okay. Next, filling the blanks. Ticket counter in a cinema hall is an example of revenue center because we earn, right? As per Payment of Bonus Act 1965, the maximum limit of bonus is 20%. Under absorption of overhead means actual overheads are greater than or more than. CS dash stands for cost of service cost centers, 13 if I am not wrong. Next, dash is system of reporting revenue and cost information to the individual responsible for the revenue causing and or cost incurring function. The meaning of that statement is we are talking about responsibility accounting. Responsibility accounting. Under integrated accounting system, the accounting entry for payment of wages is to debit wage control account and credit cash account. Okay, right. So these are about bits. Let us go through the questions. 2A question is a very basic question. It is from cost sheet. It is given for 7 marks. Okay, so sales is given, purchase of material is given, direct labor is given, inventories at the beginning of the year, that is finished goods and opening stock of finished goods, opening stock of work in progress is given. Material inventory, that is opening stock of raw material, closing stock of raw material is given. Inventories at the end of the year, nothing but closing stock of work in progress, closing stock of finished goods is given. Factory overheads were absorbed at the rate of 60% of direct labor cost. Administration expenses were absorbed at the rate of 5% of sales. Selling and distribution expenses were absorbed at the rate of 10% of sales. Okay, so very basic question. Okay, you can do it easily. Right, solution for this one. This is the basic solution. Okay, very basic problem which is given for 7 marks. Right, next. 2B are 3 questions given here. What are the various advantages of cost accounting? This question is directly available in our material. So these are some of the advantages. The primary advantage is to maintain uniformity, right? That is the primary advantage. And apart from that, we have some more advantages also. Next, Nana, what is the difference between how to determine installed capacity and normal capacity? Installed capacity means capacity which is mentioned by the manufacturer, and normal capacity means after adjusting idle time, other things from installed capacity, whatever the capacity you get is called as normal capacity. The answer is also given here. Okay, right. And next, 3A. When it comes to 3A, the question is from material cost. They are asking about EOQ and they are also asking about whether to go for EOQ or the existing inventory policy which the company is following. Let us go to the question. Mrs. KPM Limited buys its annual requirement of 80,000 units of a component alpha in 10 installments. That means as of now the order size is 80,000 divided by 10, 8,000 units. Okay. Each unit of alpha costs around 10 rupees and the ordering cost is 25 rupees. This is O. As of now the order size is 80,000 divided by 10 times. So nothing but 8,000 units. Okay, right. The inventory carrying cost per annum is estimated at 20% of unit value of alpha. So looking at this, we can calculate C, right? C is given in percentage. This percentage is applicable on unit price of raw material. So C will be 10 into 20%, nothing but 2 rupees. Nothing but 2 rupees, okay. You are asked by the KPM Limited to find out the annual cost of existing inventory policy. That means at 8,000 units, what is the annual cost? Annual cost means total ordering cost plus total carrying cost. Also, how much money can be saved by using economic order quantity? So basically what we have to do is that we have to calculate economic order quantity. We have to find out additional cost at economic order quantity and we have to compare this with additional cost at 8,000 units. If the additional cost is at economic order quantity is less, definitely we will advise the companies to shift from 8,000 units to EOQ. Next, distinguish between scrap and spoilage. Scrap means nothing but loss of units, okay, which are physically quantifiable, which are physical and quantifiable. Spoilage means goods, finished goods which are not as per the standard. There's a difference between the two. Okay, so 3A solution is given here. You can clearly see. So what we have done is that we have calculated additional cost at EOQ, and we have calculated additional cost at 8,000 units. Obviously, additional cost at EOQ will be always less or minimum compared to any other order size, provided there is no change in raw material price. Okay, that is what we have done here. Next, 3B. 3B question is from employee cost. Okay, so this is also a basic question. Okay, what is the question? Mrs. Peacock Limited is in the process of evaluation of employees welfare scheme of the company. In this regard, it has selected 3 workers K, L and M to study their wage earnings. The company furnishes the following particulars for the month of April 2023 as under. Sorry. Job completed is given. Out of the above output, rejected and unsaleable units are given. Generally, what we will do, we will subtract this 400 units from the job completed. Okay, that means good units will be 9,600 here. So good units are 9,600. This side it will be 8,000 minus 160, 7,840, and this side it will be 14,400 minus 1,600. It will be 12,800. Okay, this should be a comma. Time allowed for 100 units is given. That means start time is given for 100 units. Okay, basic wage rate per hour is given. Time taken is given. The normal working hours per month are fixed at 176 hours. This information will be helpful for calculating overtime. Bonus is paid at 60% of the basic wage rate for gross time worked and gross output produced without deduction of rejected output. What is the importance of this sentence? In this question, this point is important. It means that while calculating standard hours, let us not deduct rejected output from job completed. We shall calculate standard hours for job completed units, not for good units. If that point was not mentioned, we would have calculated standard hours for good units. But here we will calculate standard hours only for job completed units. We shall not deduct rejected units. That is an important point here. The rate of overtime for the first 20 hours is paid at time plus normal plus 1/3. And for the next 20 hours, normal plus 50%, one half. Okay. From the above information, you are asked by the management to calculate the following for each worker: bonus hours, next earnings, next direct wages cost per 100 saleable units. You can find this question as first question in our material. Okay, solution is given here with accurate calculations, which will be very easy for you. Okay. Right. So whatever the basically this question is dependent on basics. He is not only covering the bonus point, which is bonus and the non-standard plan, but also covering overtime aspect also. Okay, so you can treat it as a comprehensive question. If you are thorough with that one particular sentence which I have highlighted, you can do this problem very, very, very easily. Okay, so solution is available in front of you. Right. Next question is on overheads. This question is based on under-absorption of calculation of under-absorption of overheads and its treatment. Okay. So when it is normal, how we will treat it? When it is abnormal, how we will treat it? Okay. Let us go through the question. Messrs. Lotus Inc. or Incorporation manufactures the fountain pen called Pluto. In the manufacturing of Pluto, the overheads were recovered at a predetermined rate of 25 rupees per man day. The other information for the month of April 2023 is as under. Total factory overheads incur 83 lakhs. Man days actually work 2,97,000. Total units manufactured 80,000. Units sold during the month 60,000. Incomplete units 60%, 60,000. Okay. So from this, see, this is not rupees. This should be, so this is also hours. Okay. This is hours. This is units. This is also units. This is also units. Total units manufactured 80,000. So units sold during the month 60,000. Okay. So sales 60,000. Finished goods 20,000. Equivalent work in progress. Equivalent work in progress 60,000 into 60% complete. Nothing but 36,000. Right. 36,000. By adding these all, you will get equivalent units, which will be helpful for calculating supplementary overhead rate. to so that we can charge that to normal, we can charge that to units when under absorption is because of normal reasons. Okay, on analysis, the reasons, on analysis, the reason, analyzing the reasons, it was found that 40% of the unabsorbed overhead was due to defective planning and the rest were attributable to increase in overhead cost. So 40% is abnormal, 60% is normal. So you can clearly see here this 25 rupees is nothing but overhead recovery rate per man day, right? Actual hours are 2,97,000. So 2,97,000 into 25, you will get actual overhead. Already, sorry, absorbed overhead. You have actual overhead here 83,000. Actual minus absorbed, you will get under absorption. Out of that, 40% is abnormal and 60% is normal. Okay. Solution part is given here. You can clearly see that solution part. So if it is abnormal, it will transfer to costing P&L account. If it is normal, what we will do? We need to calculate supplementary. So normal portion is how much? This is divided by equivalent units. Okay, that is 60,000 sold, 20,000 finished goods, and 36,000 are equivalent work in progress units. So per unit, how much you got? 4.5. Using this rate, we will pass an entry. That is cost of goods, cost of sales account data, finished goods control account data, work in progress control account data. How we got these amounts? I have mentioned it clearly here. Okay, to overhead control account, right? So this is 4A. Next 4B. Yes, 4B. This is also from cost bookkeeping, where the information is given. Using this information, you have to calculate financial profits, you have to calculate cost profits also, and you have to reconcile it also. Okay. Let us go to the information. The following information is available from the financial books of Messrs. Jyoti Limited, having a normal production capacity of 60,000 units for the year ended 31st March 2023. Sales 10 lakhs. How much, Nana? For 50,000 units. See, capacity is 60,000 units, but produced only 50,000. Produced and sold 50,000 units. Okay. There was no opening and closing stock of finished goods. That means produced quantity is equal to sales quantity. This difference in quantity will be essential for adjusting fixed overhead in cost sheet, because in cost sheet overheads are absorbed on the capacity basis, right? So you have absorbed overheads, fixed overheads on the base of 60,000, but actually produce how much? 50,000. That means you have to adjust overheads again. Next, direct material and direct wages cost were 5 lakhs and 2 lakh 50 respectively. Actual factory expenses were 1 lakh 50, of which 60% is fixed, right? So when it comes to 40%, not a big issue. 1 lakh 50 into 40%, it will be 60,000, right? So remaining 90,000 is absorbed on the basis of 60,000, but we have produced only 50,000, right? So we have to account for 50,000. So 90,000 into 50 divided by 6. That is what we will do. Let us see the into 50 divided by 6. 90,000 in cost accounting, fixed overheads are decided on the basis of capacity. The plant capacity was 60,000. So for that 60,000, the fixed overhead was 90,000. If actual output was all equal to plant capacity, then it would have been not a big issue. But here the actual production was only 50,000. So you have to adjust that fixed overhead. Okay, right. Next, actual administration expenses is given, actual selling and distribution expense, interest and dividends. All these elements will appear in financial books. But when it comes to cost books, this item will not appear. Okay, so you have to find out financial profit, you have to find out profit as per cost records, assuming that indirect expenses are absorbed on the basis of normal production capacity, that means 60,000 units. Prepare a statement of reconciling reconciling the profit shown by financial as well as cost books. So first we will calculate financial profit. You will post all the transactions. Okay, when it comes to cost sheet, up to prime cost, everything will be one and the same. When it comes to overhead, variable will be as it is, just we need to show the percentage separately, but fixed we have to do necessary calculation. Then you will get profit as per cost sheet. Then we will reconcile accordingly. Okay, right. Next, 5A, that is from batch costing. Messrs. PQR Limited undertakes supply of the component 25-inch. Component name is 25 inches. Okay. In batches. Every month, a fresh batch order is opened against which material and labor costs are booked at actuals. Overheads are levied at the rate per labor hour. The selling price is contracted at 15 rupees per unit and labor is paid at the rate of 2 rupees per unit. Okay. So month is given, batch output is given, material cost is given, labor cost is given, overheads is given, and total labor hours are given. Calculate cost and profit per unit of each batch order. This is the way you need to calculate. Okay, so batch output, that is given in the question. Sales value we have calculated. Cost up to material and labor is given. Overheads we need to calculate. How, sir? See, budget overhead is given in the question. Budget cost is also given in the question. Basing on that, we will calculate budgeted overhead recovery rate. This is budgeted hours, not cost. Okay. Once you are done it, Nana, you have actual hours with you. How to calculate actual hours? You have labor cost, you have labor hour rate. Okay, so dividing labor cost by labor hour rate, you will get labor hours. Labor hours into overhead recovery rate, labor hours into overhead recovery rate, you will get absorbed overhead. That will be shown here. Okay, when you add these three, you will get total cost. So sales value minus total cost, you will get profit, and whatever the required thing, whatever the things that has asked, we can find out easily. So this is about batch costing problem. The same kind of problem is there in our material. You can clearly see we have mentioned with references also. Okay. Next, contract costing. It's a basic question that is given in contract costing. Okay. Same kind of questions are there in your material. So just you need to fill up the proforma and the problem will be done and dusted. Okay. Right. So material consumed is given, direct expense is given, wages are given. Contract price is how much? 5 lakhs on 1st January 2022. The company furnishes the following details for the year ended 31st. So 12 months information is given. The contract price is 5 lakhs. Material consumed is given. Direct expense is given. Wages are given. Material returned to stores is given. Material stolen from site is given. So see, by using material consumed, material returned to stores, material stolen from site, and closing balance of material, we need to find out by using these elements. We will find out material purchased. Okay, you can show that material consumed directly and ignore all these things. But that account will not reflect the true picture. That's the reason why what we will do, we need to find out material purchase, and along with material purchase, we'll show all these things. Okay. Then there is no to show material consumed. Okay. All right. Work expense 20%. Office expenses are given. Next, cash issued to the extent of 90% of work certified. So cash issued is, this is cash issued, right? This is equal to 90% of work certified. So work certified is how much, Nana? 100%. So we will calculate it that way. Cost of work uncertified is given. Okay, plant at site costing 60,000 with a scrap value of 10,000 and its useful life is 5 years. The plant was used in the contract for 146 days. So 60,000 minus 10,000 divided by 5 into 146 divided by 365. In this way, you can calculate depreciation. Very, very, very basic problem. The same problem is there in our material as CRD2. Okay, right. Next, process costing. Same kind of problem is there in our material CRD5. Okay. So what they have done here, they have given information of all the three processes. Okay, crushing, refining, finishing. Information is given for each process. Then what else they have given? Okay, Mrs. GORL purchases 1000 tons of copra for 50,000 rupees. That copra is nothing but input raw material for crushing process. Factory overhead for the period were 5,000 to be apportioned on the basis of wages. So factory overhead is to be apportioned on the basis of wages. Is wages given in the question? Yes, cost of labor is given, right? In this ratio, we have to apportion it. Next, 850 tons of crude oil was processed. 750 tons of oil was refined, and finally 750 tons of oil was finished for delivery. So 850. So output of crushing is 850. Output of refining is 770 and output of finishing is 750 if I am not wrong. Realize 1,000 rupees from sale of sacks, 2,000 rupees for sale of 125 tons of copra residue, and 2,550 by sale of 60 tons of byproducts in the refining process. So how to do the problem? Right. So crushing, copra, you will enter, you will post all these things. Okay, right. Sales. What is the sales here? 1,000 rupees. Why? How you got that 1,000 rupees? Now realized 1,000 rupees on sale of sack. Okay, so that you will post here. Next, sorry. Okay, copra residue, that is the waste. Okay, normal loss, that is there. Next, balance is nothing but refining, 850. Okay, ledger will automatically balance it out. Okay, next you will go to refining process. So from there you will bring the balance brought down. Okay, all the expenses will be posted here. By sale of byproduct in refining process, that is given in the question. How much, Nana? 60 tons, 2000 to 550. Okay, loss in refining, how much? 20. There is no residual, there is no realizable value for loss, just like above. The transfer is to finishing department. How much? 770. Likewise here also same thing. Okay, so this is the way we need to do the problem. Next, 6b. Mrs. Hotel Kings Highway has a capacity of 200 single rooms and 50 double rooms. The average occupancy of single room and double room is expected to be 80% throughout the year of 365 days. A rent for double room has been fixed at 150% of the rent of the single room. So since the rent of two types of rooms is different, you need to find out equivalent room days. Variable cost is given, fixed cost is given. Very easy. When variable cost and fixed cost are given per day, just you need to multiply it with number of room days. Okay, right. Next, required, calculate the rent chargeable for single and double room per day in such a way that hotel can earn a margin of safety of 20% on the rent of rooms. You are required to work out the room rent chargeable per day for each type of suite. So how to do the problem? So single room days 200 into 80% 365 and double room 50 into 80 into 365, that is given. Variable cost. So since you have calculated single room days, directly will multiply with the cost that is given there. Computation of total sales. This is the point that you need to focus on. Okay, right. So basically they have mixed up a method and a technique, marginal costing technique. Next, 7a, marginal costing. Okay, selling price is given, direct material cost per unit is given, wages is given, fixed overhead, variable overhead is given, trade discount is also given. Asking us to calculate profit volume ratio, break even sales, okay, margin of safety, and a net profit if sales are 10%, 20% of the break even point. In this question, the point is that first we will calculate, see, once we have, we can calculate 1 and 2, PV ratio, we can calculate easily. Break even point also in rupees, in units we can calculate. PV ratio, contribution by selling price per, contribution per unit divided by selling price per unit into 100, or contribution by sales into 100. Break even sales, fixed cost by contribution per unit or fixed cost by PV ratio. You will get in units as well as in rupees. Now when it comes to margin of safety, you can't calculate margin of safety with 1 and 2, but what we can do is that we can calculate net profit if sales at 10% and 20% above break even. But after calculating that one, we will calculate margin of safety. Okay, the same thing is done here also. So first we have calculated this one, because to calculate margin of safety, the formula is profit by PV ratio, right? Profit by PV ratio. Now you will get profit only when you calculate point number 4, that is this one. Point number 4. There is no way of calculating profit from the above information. There is no way of calculating profit from the above information. Okay, so what we have done is that so we have, basing on this, we have calculated margin of safety. Okay, right. So that is what we have done here also. We have calculated contribution per unit, we have calculated variable cost, contribution per unit is 76, right? So selling price, contribution. Profit volume ratio we have calculated, break even sales in rupees and break even sales in units we have calculated. Next, then we have calculated fourth one, then we can calculate the above information. Okay, because the formula for margin of safety is profit by PV ratio. Right. This is the question regarding marginal costing. The next question is also from marginal costing. Okay, right. So same kind of question is there in our material, that is assignment 24. So what they have asked in this question is that they have given the information, selling price information is given, cost information is given, and they're anticipating that there will be increase in cost in future, and there is no possibility of increasing any selling price. Okay, now company has received an order and the company wants to earn so and so profit. So in order to earn so and so profit, What is the price that it has to charge for the order that it has received? Mr. Larve is an umbrella manufacturer and marks an average net profit of 5 rupees per piece on a selling price of 28.60 by producing and selling 12,000 pieces or 60% of the capacity. His cost of sales is direct material, direct wages, work overhead 50% fixed, sales overhead 25% variable. During the current year, he intends to produce the same number but anticipate that fixed charges will go up by 10%, while direct labor rate and material will increase by 8% and 6%. That means there will be increase in cost. But he has no option of increasing selling price. That what will happen? Profits will decrease. Under this situation, he obtains an offer for further 20% of capacity. As of now, they are producing only 60% capacity, right? So still they have some spare capacity. So company received an order for 20% capacity. Mr. Larve approaches you as a cost accountant and asks you to advise the minimum price per unit for acceptance of the offer if he wants to ensure an overall profit of 70,000. Now, in this situation, the above situation, we have understood one thing. Cost is increasing, but there is no scope of increasing selling price. So profit will decrease. Now, he wants to earn a fixed profit of 70,000. So how much selling price, how much price he has to charge for this 20% order? What we will do is that we will calculate profit for the current 60% capacity. Okay. Once we calculate profit for 60% capacity, we will subtract that profit from 70,000. The balance profit will be added to the 20% capacity. By adding this balance profit to the 20% capacity, we can determine the selling price. Okay. That is what we have done here also. This is the anticipated cost. Okay. So what is the variable cost? Fixed cost is given. Okay. So what is the profit as of now that they are earning? This is the profit, but they want to earn a profit of 70,000. So balance profit is how much? 26,380. That will be added to 20% capacity variable cost. Sir, why we have taken only variable cost? Because at 60% capacity, if the company is getting, Mr. Larve is getting profit, means already the entire fixed cost is recovered. That means for the balance 20% capacity, we only focus on the recovery of variable cost. Yes, that is what we have posted here, 67,080. To that, we will add the remaining profit that we wanted to earn. Then you will get the total sales value. Divided by number of units, 4,000 units, you will get selling price that is to be charged for that or particular order. So that is 7B. Next, when it comes to 8, it is all about standard costing. Entire information is given in the question itself. Okay, we have 3 types of laborers and wage rate is standard. SR is also given here. This is AR. Okay, this is labor in standard proportion. This is labor in actual proportion. Okay, so they have asked us to calculate all the variances. The standard time is 30 weeks. The actual time taken is 32 weeks. So basing on this information, what we will do is simply prepare a table. What is the table? This is the table. Standard weeks, standard rate, standard weeks into standard. How to calculate standard weeks? Number of employees into standard time allowed. That is 30 weeks per employee. When it comes to actual weeks, number of actual employees into actual weeks allowed. Okay. So obviously, basing on that, we will prepare the entire table. Next, we need to prepare, since he is asking all types of variance, we need to prepare revised standard weeks also. This revised standard weeks is dependent on actual weeks, but it will be apportioned in standard proportion. What is the standard proportion? This is standard proportion. 75:45:60. Okay, that is what we have done. Once we have completed the entire table, then we can prepare all the variances. Okay, this is how we will prepare all the variances. Next, last problem is from budget and budgetary control. Very basic problem. Mrs. Jolly Limited manufactures product X and product Y during the year ending 31st March 2023. It is expected to sell 75,000 kgs of product X and 37,500 kgs of product Y at the rate of 60 rupees and 30 rupees per kg respectively. Direct material A, B, C are mixed in the proportion of 4:4:2 and manufacture of the product X in the proportion of 3:5:2 in the manufacture of product Y. Okay, so A, B, C products materials are used in manufacture of both X and Y and it should be used in the proportion of 4:4:2 and 3:5:2. The actuals and budget inventories for the year are given below. So particulars are given. Okay, so opening stock is given, expected closing stock is given, anticipated cost per kg is given. Okay, that is in rupees. That is in rupees. Required to prepare production budget. How to calculate production budget? See, you have sales information here, right? Sales plus closing stock minus opening stock, you will get production. That's what we have done. Sales plus closing stock minus opening stock, you will get production quantity. Okay. Now, how much of raw material? Clearly given. When it comes to X, we will distribute in, we use it in the 4:4:2. A, B, C. Okay, 8,000 units. Next, when it comes to Y, it is in 3:5:2. Okay. Then you will get raw material consumed. Raw material consumed. To that, you will add closing and subtract opening. You will get purchase quantity. Selling price is given below. Selling price is given in the question itself. No, this is selling price. It is given. Anticipated cost per kg. Sorry, purchase price is given in the question. Okay. So you take that purchase price. We will take that purchase price. Okay. And then you get total purchase cost. So what we have observed from the question paper is that most importance is given to basics. Basics. So if you're thorough with the basics, you can easily answer 75 to 80% of the question paper. All the best for future examinations. Thank you.